many people would call drawbacks like higher cost than other solutions, um, slower transaction settlement times. But to us, those are features, not flaws, because it's part of why it is the safest ecosystem in the crypto asset world. So we don't look at those as issues. We look at them as really they've been built into the ecosystem to assure its success as the safest crypto asset ecosystem.
The cryptocurrency asset ecosystem, like traditional financial markets, exhibits seasonal patterns influenced by factors such as market sentiment, regulatory changes, and technological advancements. However, cryptocurrencies are also uniquely affected by elements like mining rewards, halving events, and their speculative nature, adding further complexity for investors. In this context, ARK Invest CEO Cathie Wood has spoken about Bitcoin and the U.S. regulatory climate, criticizing how regulations stifle innovation and warning that harsh policies could drive companies away. She also highlighted her approach to market volatility, stressing the importance of client education and maintaining a long-term investment perspective. Wood emphasized that she prioritizes client needs and fund performance over her personal net worth. She also addressed criticisms of Bitcoin's higher transaction costs and longer settlement times, noting that she believes these characteristics enhance its security. Wood harshly criticized SEC Chair Gary Gensler, calling him a threat to the ecosystem and accusing him of driving innovation out of the U.S. She further noted that some companies now avoid working with U.S. investors due to regulatory concerns.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Do you think there are any other drawbacks to Bitcoin?
Well, many people would call drawbacks like higher cost than other solutions, slower transaction settlement times. But to us, those are features, not flaws, because it's part of why it is the safest ecosystem in the crypto asset world. So we don't look at those as issues. We look at them as really they've been built into the ecosystem to assure its success as the safest crypto asset ecosystem.
And how do you see the regulatory environment changing for Bitcoin or cryptocurrencies in general?
What has happened, the U.S. has been the worst. Gary Gensler, as I've said many times, has been a menace to our ecosystem and has pushed a lot of innovation associated with Bitcoin and other crypto assets into the rest of the world. So much so that many of the innovators who have moved to other parts of the world, whether it's Switzerland or Berlin or London or Hong Kong, Singapore, they will not deal with U.S. investors even. That's how bad it got.
Why?
Because they think they'll be tainted because we are regulated by U.S. regulators.
And why are U.S. regulators so strict? Like more than any other part? You know,
when you're a regulator, there's a lot of power seeking, and we know the history of the SEC and the CFTC. They've butted heads over the years, right? And we saw this during the derivatives, the evolution of derivatives in the 90s. And finally, with, I think, a Supreme Court ruling, they both regulate it, but regulate different parts of it. That is what I think was going on. There's a power struggle in the regulatory ecosystem. This is my purview. And so we may go to the Supreme Court again. I don't know. I think that was the main issue. Now there's something called regulatory arbitrage. And so that's what I mean by other countries very interested in attracting innovation are one-upping us. And I'll give you our first example when we started ARK in 2014 was drones and the Federal Aviation Administration. So Amazon was on its 9th generation drone back in 2014, and the FAA would not let Amazon fly its own drones on its own property outside. It is only in recent months since that has changed. But in the meantime, one of the companies in our venture fund, Zipline, seems to have ingratiated itself with the regulators, meaning it has, what we've observed is it has taught the regulators, prepared them every step of the way, for what they were attempting to do. No surprises whatsoever. So the FAA did start opening up a couple of years ago to Zipline. Zipline has a pilot going with Walmart in the Dallas, Texas area to deliver parcels. So, and so Zipline beat Amazon to its own game, which is really interesting. So, but this regulatory arbitrage, other countries, so Amazon went to Hong Kong, UK, Australia, India to test out its drones. And then the FAA became a little bit more understanding. I don't know why they didn't give the green light to Amazon sooner, but they did start giving the green light.
Cathie would discuss how she handles market volatility, explaining that she emphasizes educating clients about the risks and potential significant fluctuations in the value of their investments. She highlighted the importance of a 5-year investment horizon and advised clients to adjust their portfolios to maintain consistent proportions. Wood also shared her personal wealth management approach, revealing that she has always been a strong saver. She mentioned her passion for investing, which enabled her to take risks and launch her own business without going into debt. Cathie stated that her focus is not on her net worth but on her clients' needs and the performance of their investments. While she has become accustomed to market changes, Cathie remains dedicated to her investment strategy and client education. Let's return to the interview for more insights from Cathie Wood.
How do you deal with the volatility of the market and seeing such large swings?
Mm-hmm.
Because I'd imagine for you, just like in a single day, it could be up or down, $100 million.
Mm-hmm.
Do you just become desensitized to it at a certain point?
Well, I'm sensitized to it from this point of view. I think about our clients, and I think it's critically important for us to educate our clients. We're not going to be your entire portfolio. And some people in 2020, we were their entire portfolios. And, we were trying to say, no. Now we have papers, we're writing papers. And so we should be a small allocation and understand this is going to be a very volatile part of your portfolio. We're the closest to a venture capital fund in the public markets. We've always said that. And some people have understood that and other people have not understood that. So closest thing to a venture capital fund, we have a 5-year investment time horizon. We hope you do too. And so I do think about our clients. I think that our distributors, our partners, are the important conduits for that message, but we need to be out there more as well. And it's very important for us to say, look, if we've just doubled in a short period of time, you need to take profits. You need to rebalance, right? Because that will give you the psychological wherewithal that when we drop 50%, you will add back to this portfolio, because over time, we should outperform the broad-based markets by a lot from this level. So I think about it from our client's point of view. Are we preparing them enough, whichever part of the market we're in? And we've been in a very tough part of the market, and just convincing people, there's too much of momentum-driven investing. It's really bad. If you're buying high and selling low, I would think that's a very basic, tenet that you're trying to teach your audience. Do not buy high and sell low. Think about the other way of doing this. That's a much more productive way of investing. But in terms of day-to-day on the professional side, we've got a 5-year investment time horizon, and we're surfacing evidence, yay or nay, every day. Are these companies harnessing AI as quickly as we thought they would? No. We've made some important sales in this first half of the year because these companies we're not. And this is moving very quickly, and they don't understand. You don't have time. If you don't do this, others will. And so this cleansing out period, I think, has been very important for us with this 5-year investment time horizon. So what we do in the short term, when the market's treating all of our stocks in the same way, we will sell one and benefit longer term from tax losses there and buy another stock that is also down and out. It's a mindset. And so I have that base and I can take risks. But that's why when you ask the question, I think about our clients much more when it comes to volatility. I think about our distributors. I just know this is tough on them and that we need to be there. But I also know one of the reasons I left the traditional part of the business is no one is doing what we are doing. Certainly not then. Now they're doing it in the form of ETFs, but not actively managed. They're just throwing spaghetti at the wall and seeing which funds stick, whereas we're very holistic. This is all we do, disruptive innovation. We're going to, live and die on this. And, I think you want us to be, focused on this because there is so much happening. And I think when people see how quickly all of this takes off, we've started to see it with AI, but we're probably in a pause period with AI now, which many people are saying, oh, okay, what's going on?
The U.S. Federal Reserve's upcoming interest rate announcement on September 18th has left Bitcoin traders uncertain about the cryptocurrency's future price. While many expect a rate cut to boost Bitcoin's value, Bitfinex experts warn it could lead to a 20% decline. This stems from shifting macroeconomic conditions that may offset the benefits of lower interest rates. Generally, falling rates make riskier assets like Bitcoin more attractive as traditional assets such as bonds become less profitable. However, the current landscape is more complicated, raising concerns among traders. Bitcoin is currently priced around $57,000, down 2.6% in the last week. A 20% drop would take it to $46,000, a level last seen in February, which some experts view as a potential starting point for a bull run. Analysts like Marcus Thalen of 10x Research believe a drop to the low $40,000s is needed for a bull market to begin, while others, like Joe Consorti of Bitcoin Layer, see $60,000 as a key consolidation point where long-term investors accumulate. Crypto trader Dan CryptTrades notes that Bitcoin is still struggling to break free from its bull market support zone. With traders on edge, Bitfinex has called this a challenging time for Bitcoin traders, especially given the uncertainty surrounding the Fed's decision. Fed Chair Jerome Powell's dovish comments in August raised hopes for a rate cut, but its impact on Bitcoin remains unclear. As traders wait to see if Bitcoin's price will rise or fall, they are advised to stay cautious and be prepared for the market's inherent volatility. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.